Fran, are you connected to audio or did you mute yourself or?
Are you able to hear me now?
Oh, there you
Yes.
are. Hello.
Oh, there I am. Hello.
All right.
Good morning, Fran.
We'll go ahead and get started.
Good morning.
Some more folks might join us as we go along, but anyway, so as I mentioned before, for anyone who wasn't online, everyone's muted, but feel free to unmute yourself to ask questions, or you can raise your hand down in the bottom of your screen on the right under reactions. You can raise your hand. You can also type in the chat if you have a question, and one of us will get to that, but definitely want these classes to be more interactive. I was so frightened, I think, on my last class. I got rave reviews, but I was told that I, probably should have paused to ask for questions a little more often. I think I was too afraid to stop. So I just kept going. But anyway, I'll work on that as I get more comfortable doing this. So as everyone knows, this was supposed to be one class for how to list new construction, how to sell new construction, and how to finance it. But as I got to putting the class together, I realized the financing piece was so awesome that it really needed to be a standalone class. And as you'll all find out via email, as I've been putting together the listing and selling part, I've realized that those parts are also need to be standalone parts. So I'm going to end up breaking that into two classes as well. So we've got another class in about 2 weeks for the listing part, and then probably a week or so later, I'll do the selling part. So, but for today, we've got the finance part, and I'm really excited about this for the simple reason that it seems like not a lot in real estate changes. I've been doing this is, I think, my 26th year now. And, we get new forms and, there's a few rule changes and policy things and whatever. Technology obviously is always changing, but the basics sort of stay the same. But one of the things that I'm glad has changed, and it's actually been the case for a few years, but I think a lot of us still, may not have been aware of it or may not be aware of how to fully maximize the changes that RMS Mortgage Company especially is at the forefront of as far as new construction financing. A lot of us that have been doing this a while are still stuck in the concept that, a buyer has to get a construction loan, or, maybe you've got a really good builder, but he's building with his own money or his own line of credit, and he can only build so many houses at a time. And, now we've got a new way to finance new construction, which is really, and I'm going to keep saying this is the only way we're going to get out of this. It's kind of a mess that we're in. This is really not a good market. I know a lot of people think it's a good market, but it's so unbalanced that it's not really good. And buyers are suffering because of it. And the only way we're going to fix it, and it's going to take years and years, is to build our way out of it. And it's going to take realtors, I think, going out and encouraging, maybe some smaller builders to say, hey, look, I know maybe you lived through the last recession and you're nervous about sticking your neck too far out there and extending yourself too far, but here's a way to build, essentially without using your own money, to do it. And for newer agents who don't have a builder, yeah, sure, it would be hard to get in with a Casper Zach or any of the top builders that you can think of, or they might already have an agent that they work with who's really successful. But here's a chance, for a newer agent to get in, with someone who's also just, starting out, a younger, builder, and teach them how to build their business, and you can build your businesses together. So it's my pleasure to introduce someone that many of you already know, Kevin Young, Senior Loan Officer with RMS Mortgage, and someone who you probably don't, Fran Morocos, who's the Construction Lending Manager at RMS. So good morning, Kevin and Fran.
Good morning,
morning.
Bill. Thank you for having us this morning. Thank you, everyone, for attending. So yeah, we have an awesome new construction loan product that has been very busy lately, as you can imagine, with buyers having a real tough time with securing, getting under contract to buy a home, so they're turning to building. So we have a product that only requires a 5% down payment option, and it's a one-time close. So we have a construction team here at RMS. We have a group of people where, I'm the loan officer that will help pre-qualify and talk to your borrowers and get them going. But once they get under contract to purchase, we have a construction team that's managed by Fran Morocos, and they kind of facilitate the process going forward once we get the application going till the loan modification at the end when the home is complete. So I'm going to introduce Fran, again, manager of our construction department, to kind of show you a little PowerPoint presentation and kind of go over the ins and outs of the process.
Excellent. Thank you, Kevin. I appreciate it. Thank you very much for having me this morning. I do appreciate your time. I know we are in a crazy time. Construction lending has been taken off. Our 2020 year was astronomically busy from the moment COVID hit till even through today. We're in our spring busy time. So we do appreciate you jumping on the call. My job here is to support Kevin in helping you folks to get more properties built, get your commission when you want to get paid your commission, and help you and your builder grow your business. So what we've done is we've learned through probably trial and error what works and what doesn't work from a construction loan perspective. And we've tried to, at the same time while managing the risk, try to make sure that the cash flow is always there for your builders to make sure that he's able to pay his subcontractors, which will keep his subcontractors coming back to get more houses built.
Hey, Fran.
So we've put together, oh, yes?
Oh, sorry to interrupt. Can I ask you to put your presentation in presentation mode? Just maybe it'll make it bigger.
Oh, sure. Yeah.
For the recording, especially. And I would tell you how to do that if I could remember. But...
Yep. There you go.
There you go.
Is that better?
Yeah, awesome.
Excellent. All right. And Kevin will follow up with this presentation for you folks so that you have it. We've put together, as Kevin mentioned, a dedicated construction lending team to make sure that our whole focus is getting that construction loan to the closing table as quickly as possible. So we have a dedicated underwriting team, a dedicated processing team. We have certified loan officers. So Kevin will be your certified construction loan expert. And we have limited that to certain loan officers to make sure that all of the resources are going to, the good loan officers that took the time to understand the program. So from the very first time we get the contract in, which is where you folks help with your builders and the land contract, we're trying to make sure that we're taking the cost of the land plus the entire cost to build that project. And we're lending up to a true 95% of that acquisition cost. If we have borrowers that already own the land, perhaps you have builders that you're able to find that they can start working with, we will use the as completed value from a loan to value perspective. So some other competition, they may say they have a 95% loan to value, but they might be looking for 15 to 20% of the land cost and then 95 overall. So it's not a true land plus cost to build, 95% all in. We have Fannie Mae loan limits. We have modular homes that we can do, which add an additional layer of risk that we'll get into in just a little bit. But our goal here is to solely focus on the construction piece to make sure that we have enough money to pay the landowner in full day one at the closing. So whomever owns the land will get that land cost. And that becomes important if the builder owns the land, because that's additional cash for him to hopefully get it through the development a little bit quicker, get onto the next phase of the development. And we'll show you folks how you can work that with the builders as well. We'll give your builder a 10% deposit at closing. So again, cash flow is king for these folks. We want to make sure that they're able to put deposits down on their material costs As you all know, all of the materials for new construction have skyrocketed. I believe Bill sent out an article yesterday. You know, some of my construction costs are up 20 to 25%. That can mean $25,000, $30,000, $35,000 in increased costs. So your builders being able to maximize the cash flow to get the deposits done sooner is going to allow them to stay true to their budget and get the houses finished as quickly as possible. So we really try to coordinate the process to make sure that from a team concept, everybody was included in that. From when does the realtor want to get paid their commission? What is that expectation? We can certainly accommodate that. We want to make sure that the borrower is protected. So we're giving the best interest rates available on the permanent phase side. RMS is very successful on the purchase business. We offer very competitive interest rates, and our construction loans, once the home is finished, they'll modify right into a Fannie Mae 30-year fixed market rate. And we're very competitive on that angle as well. From an efficiency standpoint, we are very transparent from the day of the closing forward. We online draw management system called Built. It's accessible from any computer or any handheld device 24 hours a day. So what we do versus some of the competition is once the inspector says he's ready for his first inspection, my dedicated construction inspector is out at that site every 2 weeks automatically. So typically you might have some builders that are a little more old school, which is where I grew up in, and they may say, you know what, I only use 5 draws. The reason why they only want 5 draws is because that's what typically the banks and credit unions are offering them. So they've built their business around how they can get the cash flow. We've kind of shaken that up a little bit to say, Mr. Builder, we're going to pay the land off in full at closing. We'll give % on your construction contract at closing. And then as soon as you're ready for first inspection, we are out there every 2 weeks automatically, releasing money based on the work that's been completed. As soon as my inspector has finished action report, he's going to upload it into that online draw management system. And then both my borrower and my builder will receive email notifications that the report's been complete and all of the photographs have been uploaded to support the work that's been done. The builder then logs in to his dashboard. So he sees all of his projects going with us at one time. He sees exactly how much money has been freed up based on the work that's been progressively marked up by the inspector. So if something is 50% done, my inspector will mark it 50% done, and the builder gets 50% of that line item. For those of you folks that have been in construction lending a little bit, you know, typically the builder has to wait until the foundation is in before they can even ask the bank or the credit union for their first draw. So now your builder is out all of that site work money, all of that concrete money, all of that labor money until the banks go out, do the inspection, wait for the inspection to come back, figure out how much they're going to, you know, release for a draw, and then give the builder the money. We are very fashion forward with that. As we're ready for the builders. So we're using the technology to our advantage, and we're small enough where we pick up the phone and talk to the builder, make sure that the budget is acceptable before we even get to the closing table. As soon as the builder asks for the money online, your borrower gets another email notification that says, hey, your builder's asking for a payment. We then ask the borrower to log in and approve the draw. So all of that stuff is online, it's real time. There's no review process of the inspection. The borrowers have access to our inspector as well. The inspector is not an appraiser. My personal opinion of appraisers will stay my personal opinion because sometimes they just get in the way of my transactions. So we are using a builder by trade who is our inspector. So they can walk the walk and talk the talk. They're always accessible to the borrower if the borrower has a question on anything that's been released. So again, from a team concept, right from when your borrowers meet with Kevin all the way through to the modification piece. We want to address any and all concerns that any of the involved parties have at any point in time. And let's see. So we do have a one-time close construction loan. Again, we take the cost of the land plus to build. We merge both the construction phase and the permanent financing phase into one program. So there's one closing, there's one set of closing costs. We have certain requirements, minimum FICO score of 720. However, if you have a borrower that's less than 720, please do not stop that from getting in touch with Kevin. We have credit repair options that Kevin can work with your borrower. We have exceptions that we've done, depending on the compensating factors, depending on the builder. So if we have repeat business from a builder, we certainly want to make sure we're putting forth every effort to get that loan to the closing. And if there's an outlet for it, RMS usually does not say no. We can also do 2-unit homes and 3 to 4 unit homes. Again, the types of construction that we'll do, we do stick-built, modular homes. Modular homes are a little bit more intricate in the fact that the modular homes are different depending on the modular company that the borrower is using. So it really comes down to what's included in that modular contract, and more importantly, what's excluded from that modular contract. So for any of you folks working with modular companies, we really have to take a look at those modular contracts to see what's not being done by that modular provider and make sure that we have all of those construction costs included. We have a fairly dynamic modular home checklist that Kevin has that kind of gives the borrower an idea of, okay, let me look at modular company's going to give me and make sure that by the time that modular unit is delivered, I have the foundation on, I have the utilities to the house. So when I flip that light switch, I know that the lights are going to come on because RMS helped me to put together all those numbers. Any questions so far? I didn't see anything come up, but I'm from a family of 7 kids, so if you don't talk fast, you don't get heard. So I just wanted to check in and see if there's any questions at this point or if I can keep going. Excellent. I will decide I can keep going. So again, we're doing both credit approval as well as the construction project approval at the very same time. So as soon as Kevin's able to get them into an application status, we'll go on cost worksheet, get them into processing. We have dedicated construction lending processors that will work the conditions. And then my team will reach out to the builder. So if the builder is not someone we've done business with yet, we will work with them to get them onto our builder acceptance list. We don't approve the builders, so we're not pulling credit reports on the builders. We're not looking at tax returns on the builders. Sometimes builders get very protective of that information, rightly so. We're more concerned with their scope of experience in building houses and what size houses they've built and how long they've been doing it. So we bring them into an acceptance into the program. We'll review the draw schedule with them to make sure they're comfortable with it. And all of that is happening while the appraisal is being done. So the biggest piece for us is having the ability to get that appraisal back. And that's where the contract and the documents that we need from you and your borrowers are going to dictate what that timeline is. In order for us to be able to do a construction loan, we need a contract for the land. So whomever owns the land can give a purchase and sales agreement. We need a construction contract that's going to tell us what the size and scope of the house is, what the cost to build that house is. And then we need the plans and specifications. So I would like to spend a little bit of time discussing each one of those. So for the contract of the land, a couple of key things that we're looking for. The biggest one is always going to be the closing date. We've seen some land contracts come over to us with a 30-day closing date. If the borrower has not already entered into a contract with the builder, if they haven't already finalized their plans or their specifications, there's probably an unrealistic expectation that we can close that in 30 days. So from a listing perspective and a signing on the dotted line perspective, that's where you folks working with Kevin to be able to say, okay, where in the process is the borrower? If they don't have a builder yet, if they don't have plans, if they don't have specs, 30 days is just not going to cut it. If they've been interviewing builders and they're pretty close to signing or finalizing numbers, they've made some of their final decisions, the builder's gotten back to them with numbers, we're probably looking at a 45-day closing if all the credit conditions are there as well. So it depends on how motivated your borrower is to work with Kevin to get us what we need. But the biggest piece is that purchase and sales agreement. I don't want the seller getting a 30-day close and then a week before that 30 days is up, we're asking for an extension. So right from the get-go, we like to look at those timeframes and whether or not we can meet that date. One of the biggest challenges that Kevin and I face today is really the appraiser's turnaround time. Most of our appraisers are completely out straight. They're 3 to 4 weeks on the turnaround time, and that's just from when they get the order. So again, if I don't have a fully executed land contract, a fully executed contract to build, and the plans and specifications, my clock hasn't even started for that appraiser yet. So with respect to them being the necessary evil in this whole project, I can't do the loan without them. I want to be able to give them a full package. So the land closing dates are going to be critical based on where your borrower is with your builder. Another thing that is very critical to the whole appraisal piece are the specifications. So the better defined the specifications are, and this is something that we work with some of our builders with over time, they get a little bit better because they anticipate what the appraisers need. It's really to give the appraiser the best visual of what that house is going to look like once it's finished. So if I have a contract that comes in and says there's a $10,000 flooring allowance, is that a specification? Well, yes, at the very least, I know that there are going to be floors included, but neither myself nor the appraiser can tell you what type of flooring is going to be in that house at the end. We're much more looking for builders to put into their contract. Borrowers have a $10,000 flooring allowance to include at a minimum, tile in the kitchen and bathrooms and hardwood floor throughout. That doesn't necessarily mean that the borrower has already picked out their final hardwood flooring or their final tile selection, but it gives the appraiser an idea that it's not going to be linoleum and upgraded carpet. So they're now able to say, you know what, I now need to find better comps that are going to have tile and hardwood floor or better, so I can compare it to my end loan house that once it's finished. So the better visual to the appraiser, the better appraised value. I don't want to leave any appraised value dollars on the table just because the appraiser didn't have better defined specifications. So, as far as cabinets, is it going to be stock cabinets or is it going to be crown molding? Is it going to have the custom finishes? Just those types of little things that may not seem like a lot, or if we come back and we ask for better specifications or more detail in the specifications, it's not because we're trying to be difficult. We're really just trying to say, okay, if this is a 2,000 square foot, 4-bedroom, 2-bath colonial, what's the inside going to look like? Because you've given me the visual of the outside. Now I need the appraiser to say, okay, should I be in this neighborhood for comps, or do I need to downgrade it to this neighborhood just based on some of those final quality finishes? So that's where we work with some of our builders, and we want the repeat business from the builders so they get to know what we're looking for from a specification standpoint. To that end, I don't expect my builders to become technologically savvy. My goal is to keep the builder out on the project building the house. So I don't want him to get bogged down in all of our paperwork. So that's where we have sample spec sheets available that they can just type over and customize. We have sample contracts if they need them to. Again, we're not advocating one or the other. It's just to help the builder get to the end line to be able to give better data so we can forward that on to the appraiser. If there's something that we need to help better explain the product or what we're asking for, we have probably already built it and have it in our library of resources. So by all means, do not hesitate to reach out and to Kevin to say, hey, this borrower has a question on the insurance. We have an insurance guide available. because the borrower has choices between a homeowner's policy or a builder's risk policy. So our insurance guide will tell them a little bit about the differences, and then they share that information with the insurance agent so they're better equipped to make a more informed decision. Because they do have to get the insurance before the closing, we want to make sure that they have options and they know what those options are. So it's not just getting to the closing table. Again, from a document standpoint, when is the realtor going to get paid their commission? How do they want to get paid those commissions? We have what we call a pre-closing conference call. So about a week before the closing, we're going to get on a phone call with the borrower, the builder, yourselves, and the loan officer, and we're going to review the project numbers. We're going to review the program. We're going to set everybody's expectations so that the closing now becomes a much more pleasant experience and not the first time the borrower is able to ask questions about these things. So part of what my construction coaches are doing is we'll reach out to the builder and we'll send a draw schedule and say, okay, if there are realtor commissions involved, we can itemize those right on the draw schedule. So if it's $10,000 that needs to be paid out to the realtor for commissions, that's going to go right onto the construction budget. And then we ask, when are we paying out those commissions? So I have some builders that want to give the realtor the commission right up front at the closing and have them go on to the next project and find the next borrower. I have some builders that want to give the commissions out at the time the house is completed. And I have some builders that want to give half up front and half at the end. So that's where you folks, when you're working with your builders, it's whatever you can negotiate with the builder, we can support it here at RMS. So we just need to be communicated what the dollar amount of the commission is, what the amount the commission is based off of. So for example, I don't want my realtor to just get the commission on the land listing. So if I have a purchase and sales agreement on a land contract, but you've been working with the borrower and the builder to sell them the whole package, land plus the cost to build, we want to make sure that the commission, or we want to clarify if the commission is based off of that land piece only, or if the seller's paying that, or if you're getting it on the whole build package, land plus cost. So again, it's just having those conversations, knowing what questions to ask and when. Again, we don't want to get to the closing table and then find out that there were supposed to be commissions paid out. That doesn't make you folks happy, certainly doesn't make us happy, and it's a lot more work to fix it. So we're all about open communication. We like to, we're very transparent. So we want to confirm that the draw schedule is acceptable to the builder before we even show it to the borrower. Because the borrowers, more often than not, are going to build maybe one house in their lifetime, maybe two, but the builder is really where we want the cash flow to work for their project. So we want to make sure if the realtor has to get paid, when are they getting paid? And we're going to earmark it on the draw schedule, and we communicate it to all parties as well. So everyone's expectation is set. And then at the closing table, we meet those expectations. So it's really a matter of educating you folks on how to get that built into the contract and then communicating it to us so we can support it on our construction draw schedule as well. Most of the stuff I've already talked about. I would just like to give a quick little scenario from a turnkey perspective versus why you should go with a construction to perm loan from a builder's perspective. So if any of you have any builders that you're working with, let's say they have a 10-lot subdivision. They're the traditional builder. They're using their own commercial line of credit. I have some builders that don't trust banks to this day, so they like to use their own cash. Some of my builders are very land rich but cash poor. My program is looking to kind of balance that or tip the scales more to where they're cash rich and land poor. So if we have a builder that has a 10-lot subdivision and they want to go turnkey all the way, they're going to hook up with you folks to give you the listings. You're going to say, here's the house. Once the house is done, Kevin's going to come in and give you end loan financing. So the builder gets paid once that house is done at that one closing. If the builder's using a line of credit or his own cash, he may be restricted to how many houses he can get done at once. So let's say he can do 2 homes at the same time or even 3 homes at the same time. He is going to bring his site work people in to get those 2 or 3 lots prepped. Then he brings his foundation in and gets the foundation poured. If we're looking to do, and that's all on his dime, he has interest carry costs. It could be just cash out of his own pocket. So as those subcontractors want to get paid, the site clearing has to get paid. The hole has to, the site excavators have to get paid. The foundation people have to get paid. The materials people have to get paid. So that's all coming at a cost to the builder. If we have a construction to permanent loan, the borrower is taking out the construction financing. So that lot is no longer on your builder's balance sheet. If your builder owns that lot, he's going to get paid that full lot cost day one at the closing. He's also going to get 10% on his contract to build. So again, keeping numbers, even if we have a $400,000 turnkey that says, I'm going to sell you this house for $400,000 when it's done, your builder has to wait 3 to 4 to 5 months until he gets that $400,000, plus any deposits. If you go construction to perm, let's say the land is $100,000 and the cost to build is $300,000. Day one at the closing, he's going to get $100,000 for the lot cost and $30,000 on the contract to build. So he's able to pay commissions out of that or pay the commissions through the construction budget, and it's no longer on his balance sheet from an interest carry perspective. The borrower has taken out the financial risk by taking out the financial construction loan with us. Now, every 2 weeks, my inspector goes out. Any work that your builder has gotten done, he's going to get paid for. So it's a guaranteed paycheck. As long as the builder shows up and gets some work done, we're going to free up that money. So he's getting paid systematically every 2 weeks on every single lot. Now, because you are all fantastic realtors and Kevin's such a great loan officer, if you bring them 7 or 8 pre-approved borrowers that all want to go construction to perm, guess what? We don't have any restrictions. I'm not going to say, you know what, we only want to do 3 at a time and stop at that until he's done those 3. We could potentially close 8, 9, or all 10 in that subdivision within a relatively short time frame. Now, guess what? He brings his site work people in and they get all 8 to 10 lots done at once. So the economies of scale grow with your builder because now he's bringing in the site crew people once as opposed to possibly 3 at a time or 3 different stages of construction building. So again, he's going to get all 10 of those lot costs. He's going to get 10% on the contract to build, and then he's going to get a paycheck every 2 weeks based on how much work he gets done. So it's a win from a builder's perspective. This program is very builder centric. We have a document that your builder will sign that's a contractor performance agreement. That really says if anything were to happen to the borrower, let's say the borrower loses their job, which some of our folks did during the COVID, they get divorced or life situations happen and they walk away from the project, RMS will continue to build that house according to plans and specs. The reason behind that, if any of you folks lived through the 2008, 2010, 2012, the sky is falling period, a lot of those builders, if the borrowers lost their jobs, those builders were out that money and the lender stopped lending on construction loans. So the builder was mid-build and he had no money coming in to finish that house. If RMS is forced to take that house back through default, through foreclosure, which again is not what we want to do, but from a risk management perspective, we think this way. If eventually when I get that through foreclosure, I would much prefer to have the house built and finished. So now I can sell a finished product as opposed to stopping the construction, when the house is Tyvek and now it's open to the elements and there's, it's just sitting out there not being worked on. So we have an agreement with the builders on every single loan. If something happens between RMS and the borrower, we will pay you, Mr. Builder, to continue to show up and build that house according to plans and specs. Not sure any other competition is offering that to the builder. So, we realize what the builders have gone through past experiences. They've always been left out to dry from a construction financing perspective. So again, this is a very builder-centric product. We accommodate the Realtors Commission because we can't do this without you folks. And then we have a fiduciary responsibility to the borrower. So we're in line regulation-wise on the mortgage side. We're managing the risk from a construction loan perspective. My inspector is out there every 2 weeks, making sure that progress is being made. If there hasn't been progress with 2 inspection reports, guess what? I'm on the call with the builders to see what the holdup is. Could be a permitting issue. Could be, the town is only open once every other Thursday. So we just want to make sure that we're constantly in contact to get that house finished to where we can now get your borrowers out of the construction financing piece and into the permanent mortgage piece. Another big difference between the turnkey and the construction to perm loan, that same situation where the borrower loses their job. Let's say it's been a turnkey from day one. It's, 3 to 4 months later, the house is done. You folks are ready to go to the closing table and the borrower loses their job, or they've lost their job from COVID and they haven't gone back yet. You and the builder now either have to make a decision of, hey, we're going to have to find another borrower, which is going to take another 4 to 6 weeks to get to the closing table, or you're going to have to wait it out for that borrower to get back to work. If they had a construction to permanent loan, if that same borrower lost their job and they can't modify with me until they go back to work, guess what? That should not negatively impact your builder. As long as the builder has finished the house and has delivered a permanent certificate of occupancy, we're going to pay that builder his final draw. We want him paid in full and moving on to the next project, while the issue between the borrower and RMS is something completely out of the builder's control. So we don't want to negatively impact the builder. If something's happening on the borrower side, RMS will handle that outside of that final payment. So again, it's not like we're going to hold the builder hostage to say, hey, you can't get your final payment till this borrower goes back to work. We realize that that has nothing to do with the builder, has nothing to do with him finishing and completing his contract and providing the permanent certificate of occupancy. So again, we want to take care of the builders because we want the repeat business from both you and the builder. So we've built in a lot of mouse traps to help the builder get paid whole, while we're managing the risk and making sure progress is always being made from a borrower's perspective, with the end goal of trying to get the borrower into that permanent financing at the end. So we do have some builders that have taken with this program and they've been able to build their business through it. When they log into that online inspection system, they're able to see, again, all of their projects all in one fell swoop. They say, I have 15 active projects, I've done 31 all time, and I'm in 9 different subdivisions with RMS. They can log in and at any point in time from a cash flow perspective, based on those inspections that have been done, they know exactly how much money they can tap into from each project. So we've taken a lot of the administrative pieces off of the builder's to-do list. So no longer does he have to say, okay, where do I think I'm going to be on, that Main Street project on Friday? Now I have to remember to call Fran and Kevin at RMS to schedule an inspection. Hopefully the appraiser gets out there. Hopefully they get it back to me. Hopefully they give me what I'm looking for. Our system takes all of that guesswork out. We automatically inspect the project. We release any monies that are done based on what's been completed according to the draw schedule. We email notify the builder. He logs in and says, yes, please pay me that $30,000 because I've done all the work. And then as soon as the borrower approves that draw, we wire transfer the funds the same day. My team, if we see that the borrower has not logged in to approve the draw either the same day or the next day, we proactively reach out to that borrower. Because I'm sure most of you know, we do have some borrowers that want to withhold a $30,000 payment to the builder for a $50 scratch in the paint on the wall. I'm very hands-on. I'm very aggressive with the borrowers to the point of, your builder did $30,000 worth of work. Let's approve that draw and get him his money. And now let's talk about what his remedy is going to be for that scratch in the paint. So we try to keep apples and oranges separate and we keep them going. If there's a complete meltdown and the borrower doesn't want to approve the draw, RMS always reserves the right to approve that draw based on the documentation that we have with the borrower. Again, we're looking for completion, not necessarily 100% satisfaction, because that is defined differently from borrower to borrower to borrower. But we have several conversations before we get to that point. So we remain hands-on from the minute Kevin says, hey, these people are ready to go to construction, we take it all the way through to modification and beyond, because we are servicing those loans as well once they're done. It's a very user-friendly system. Again, they can access it from their phone, their iPads, their computers. It's available 24 hours a day. They see the entire budget for the entire project. They see how much is remaining. They have access to all of the draws that they've taken. So it's pretty intuitive. You know, they don't have to send in any paperwork anymore. It's all electronic. So they electronically sign the draw request that says, yes, I've been building this house according to plans and specs. Yes, I've been paying the subcontractors. I'm not aware of any liens that are being placed. And then we have an online lien waiver system as well. So again, we're eliminating all the paperwork. And then once the house is 70% complete, we regroup as a team. So we're going to reach out and say, hey, we got Fran and Kevin's house to the 70% complete mark. Let's start talking about the modification process. That's where if the realtor commissions have to be paid out, we're going to want to coordinate, are we cutting a check directly to you folks, or are we releasing that line item to the builder and then the builder's going to pay that? We want to make sure that you're communicated with that piece as well. If the borrower hasn't locked into an interest rate yet on the permanent side, that's where Kevin will that piece. As soon as the permanent certificate of occupancy has been issued and the final appraisal inspection has been done, we want to get your builder paid in full so he can move on to the next project. And then we work with the borrower over the next week or two to schedule a modification signing, which is really just we're transferring over from the interest-only payments into the 30-year fixed permanent mortgage. And then we have some fees included in that. So Kevin, again, will forward this document out to you folks. And I believe that was in 2 very long run-on sentences for you folks, but I know time is money. So I will certainly take a break now and see if there are any questions from anyone.
So Fran, I know one of the questions, I had written it down and April asked it, is God forbid what happens, buyer loses their job, something like that, they family emergency, walk away from the deal, what happens to the project at that point?
So yeah, as we've mentioned, we will work with the builder to continue building that. And then that's where we come in from a loss mitigation standpoint to say, okay, Mr. Borrower, what are your options? So if the borrower, there's absolutely no avenue for them to pursue it. They don't think they're going to get another job anytime soon. Because again, if they lose it, you know, a month after closing, they still have 4 or 5 months before they can get a new job before we have to modify their loan. And what Fannie Mae has done, because we have such a clean program, Fannie Mae has given us some variances. So it's not like we're doing another, you know, credit documentation recheck at the modification time. We would just have to verify that they're back at work. So it's not like it's another processing, another credit report, all that fun stuff. But in the case where a borrower may lose their job and they can't proceed with it, that's where, you know, if we exhaust all of our other avenues available to them, that's where we would come in and say, you know what, if we're not able to refinance you into another program, let's say it's an FHA program takeout, maybe their credit's deteriorated because of life events, we may look to say, okay, looks like your only option is to list it and sell it. And that could, you know, there's a number of different options. So that's where Kevin and I will get with the borrowers and say, okay, what is the problem? And what, you know, if you lost your job, do you have any other prospects? How long do you think you'll be out? You know, if you've lost your job so that you're down one income, do you have the ability to add a non-occupant co-borrower? So that's where we really strategize to say, okay, Mr. Borrower, let's look at what the challenges are and see what you have available to you as options. And then Kevin and I take it from there and say, okay, let's come up with a plan B for these folks, all the while paying the builder to get that house done. So that at the end of the construction term, if the borrower is able to turn it around and get it back on track, the house is finished. If not, you know, they're either going to sell it as a finished product or, you know, God forbid, we take it through legal channels to take it back, which we have not done since we've started. But, you know, we want to work, our goal is to get the house done and get the loan modified. So our goal is to always work with the borrowers sooner rather than later. I had one loan in process where we hadn't heard from the woman in a month or two. It turns out she was a home health aide. She lost her patient who was also her mother because her mother passed away and she couldn't find another patient. So she couldn't close her loan with us even up front. But she, you know, we're waiting for her to get back to work. So we'll sit that and keep that in process. For loans that have closed, you know, we're checking in with the borrowers and the builders periodically to see if anything has changed or not. And that 70% mark is a great place to start talking about it. One of the key features that we do is, let's say you have borrowers that have a house that they need to sell. Kevin has the ability to not include that current principal and interest and tax payment on the current home as long as they sell that house before they modify. And that's huge from a qualification standpoint. It allows the borrower, if they have access to the 5% down plus closing costs up front, we can go to the closing table, get their house started, and then let's say at the 70% mark completion, they say, okay, now we're going to list our house to sell, so that they only have to move once. So they get their house finished, we pay the builder in full, they move into the new house, they sell their previous current residence a week or two after that, and then we can go to the modification table. And at modification time, they are then able to pay additional money down, let's say to the 80% mark. So they would have never made a PMI payment. So again, where we want to maximize financing up front, just by conversation with the borrower. Kevin's a certified construction loan officer because he's equipped to, get the situation from the borrower and come up with the best plan for the borrower. So we say, we know that you qualify for this house once it's finished, but you can't carry both mortgages. As long as your intention is to sell this house before you modify, we don't have to include it in your ratios. So again, it gets them to the closing table a lot faster than saying, we have to sell our house. So that could take another 60 to 90 days to have the money to come to closing. So then we can, start our process a lot faster because of what we're able to do here at RMS. So we're problem solvers here, and it really, each situation can be a little bit different, but we always want to have the conversations and keep the lines of communication open. And hopefully I answered that question. If I didn't, please let me know.
Well, you did. So obviously it sounds like it's probably never going to happen, and you're going to do everything you can. And obviously time is on our side. But just to be clear, so the buyer actually, once the closing happens right at the beginning or 45 days in or whatever, the buyer actually owns the land, and they're technically on the hook for all that money. So, I mean, I'm assuming, let's just say again, a non-correctable situation, which probably would never happen, but technically, either you would have to foreclose on them, or they would have to sign everything back,
sell and pay us off,
or
exactly
whatever.
Yep. Well, yeah. So we had a loan where we closed, and then after the closing, they weren't able to get the building permit. And in that situation, the borrower comes to us and says, you know what, they didn't approve our building permit. We don't know what we're going to do. In that particular instance, the builder had owned the land previously, and he owned all the acreage around it. He was able to come in and say, you know what, I know that the county doesn't like this plan. I'm going to buy the land back from you, and then we'll rework to whatever the county restrictions are or requirements are, and then we'll take another project once we're ready to do that. So the builder at that point was able to come in and buy the land back from my borrowers and pay off my construction loan. Because even if I'm giving them a $400,000 loan, I'm not dispersing all of that money day one.
Right.
So it could just be whatever my outstanding principal balance is, that's what needs to get paid off. I did have another one where they were not able to get the building permit, so they went and got a land loan to pay off my construction loan because they needed more time to work on plans, permits, and they wanted to change the floor plan of the house itself. So again, it depends on what the situation is. That's where Kevin and I would work together as a team and say, okay, here's option 1, option 2, and option 3. They may not all be pretty, but here's the options that are available to the borrower, and we kind of work with them with their specific situation.
Sure. Were you suggesting in the pre-closing conference call, when the buyer and the builder and everybody's on a conference call together, that's when you would talk about commission and negotiate when the agent would get paid, or did I misinterpret?
No, so that's where we just finalize it. So what my team does is as soon as we get the loan into process, my team will reach out to the builder, send them a draw schedule, and they'll say, please let us know how the commissions need to be paid out. So then we confirm it with the builder, and then we send it to the borrower. And then on that pre-closing conference call, that's really where we finalize and review the numbers. We'll say, we have the cost of the land at $100,000. You've given a $1,000 earnest money deposit. We have the contract to build of $300,000. You've given the builder a $5,000 deposit.
Right.
We have the land will be paid in full. We're going to give the builder his $30,000 minus the $5,000, and we're going to pay out commissions of X at the closing, so that everyone is all on the same page.
Yeah.
And there's no surprises on the CD when the CD goes out.
Right. And why would
so we negotiate and communicate it first, and then we just confirm it on the pre-closing conference call.
Yeah, and why would the builder care when we're paid necessarily?
Well, and that's all builder character and builder preference. So I do have some builders that say, hey, I don't want to pay them that until the house is finished, because they might want the realtor to work with the borrowers to make those final design choices or those final color selections. So they kind of make you want to earn it a little bit more. I have some that say, you know what, they did their job, give them their money, I want them on to the next one. So it really depends on what you're able to negotiate with the builder to make sure that you folks are getting paid when you expect to get paid.
Okay.
We want to support that, and we customize it to make sure we're supporting everybody.
If anyone else has questions, just unmute yourself and feel free to fire away or type it in the chat. Otherwise, we'll start wrapping up. Kevin, did you have anything to add, or?
Well, if you guys are talking with your customers, about new construction, obviously the best thing is just to have them give me a call, or have, you and them, we'll do a conference call and kind of go over some things and the process moving forward. Of course, we cannot start the loan application process until we have the build contract plans and specs. And of course, if a land purchase is included with the overall package, then we would need the contract for that. And again, to back up what Fran said earlier, we close, it's a one-time close. So we close on the land and the construction loan all at the same time. So no, it's just best to pick up the phone and have them call. And again, we will make exceptions as far as, if depending on the loan to value, the down payments, debt to income ratios, as far as the credit score goes. So we need to take a look at the overall, application and kind of go from there. But it's everybody's building, so it's a way to, keep your buyers and get something going, opposed to, as I have a lot of people doing every week, putting offers in and putting offers in and putting offers in up against 20 other offers. It's just been crazy. So hopefully it's a good option for some of you folks.
Kevin and Fran, did you see those two questions? One was, what is the buyer paying during the construction process? Are they making any monthly payments at all, or?
Yeah, that's a good question. So the borrower is making interest-only payments during the construction phase on only the outstanding principal balance each month. So that will increase as the builder continues to take draws. And that's part of what we go over on the pre-closing conference call, because Kevin would have had that conversation up front. The disclosures all discuss that as well. But until you have that conversation with the borrower, sometimes it doesn't make sense to them. Another thing that we're able to do, let's take that same scenario where they have a current mortgage that they're paying. They're going to sell that house once their new house is built, and they're a little concerned with how they can make their mortgage payments plus those interest-only payments during that construction phase. We have the ability to add in an interest reserve into the overall construction project, so that interest reserve account is able to make those monthly interest-only payments for the borrower who's cash flow sensitive. So if they're living paycheck to paycheck and they have a lot of equity in their house, they don't know how they can manage both payments at the same time. We have a solution for that. We would build in an interest reserve account to the overall budget. So every month we send them a bill. It's $600 for your interest only payment. They say, yes, we approve, and then we pay it from their interest reserve account.
So all these loan applications are case by case, so they may not be required to make any payments, during that process. It all boils down to down payment, equity, and what the borrower wants to choose to do. It is interest only, so the payments are pretty reasonable.
And how soon can you close after the appraisal comes back? Say it takes a month for the appraisal to come back. Can you close a week later, 10 days?
Couple of weeks.
It's 7 to 10 days after the appraisals, and as long as the rest of the credit conditions have been sent in, we're getting to the closing table. So that's the biggest force, especially in my main territory. That's the appraisal is the longest piece. So we kind of have everything already teed up and ready, so that as soon as the appraisal comes in, we're just doing the final review, scheduling the pre-closing conference call, and then getting to the closing table. So we don't want to hold up anything. We would have done the credit underwrite piece, the project approval piece, And then it's just, did the appraisal hit the market value that we were looking for this project? And then we take it and run with it. So we don't want there to be any additional holdups on our side. So that's why we work all of the angles at the same time, waiting. That's why the sooner we can order the appraisal, the faster we get to the closing table. So the faster we have the land contracts, the contract to build, and the plans and specifications, the faster we can get that appraisal order in their queue.
The first thing we do is order the appraisal. I just submitted an application the other day, and the borrower is just signing docs now, and we've got the appraisal already going. You know, as to we hit that appraisal button, get that in ASAP.
Wow. Well, thank you, Kevin and Fran. This was awesome information. If no one has any other questions, if you do, speak now, or you'll have to call Kevin directly. All right. Well, everyone have a good Tuesday. And again, thanks, Kevin and Fran. Appreciate it.
Thank you, everyone.
Thank you so much, everyone. Have a great day.
Wonderful day.
Bye.
Bye.